Hey everyone, just a quick heads up. This episode is best experienced on a computer. We'll be sharing our screen and walking through some live examples using this link software, so you'll get the most value by watching along on a computer. If you're listening to the podcast, no worries. We'll do our best to describe what we're doing, but definitely check it out on YouTube or your desktop browser. Let's dive in.
What's up, Paulito?
Hey, what's up, Ari? How are you doing?
I'm doing great. How are you?
I'm doing good. I'm doing good.
So what I was thinking for today, since, Elon is now with us and he's sipping wine over there in southern France. His wife
I'm jealous.
and family. I know. Hoping he's having a good time. I was thinking maybe we should talk today about OTC. OTC companies, OTC alternatives. Like I was following our shared user from the David's link this week, and I've seen a couple of alerts and notifications from OTC companies. Some companies we were involved with, some companies we've just been following, some companies we got from this trading website. Remind me the name. We looked last week.
It was Investors Hub.
Investors Hub, exactly. Where a lot of people talking on different companies. Maybe you can walk people through this and why is it good to go in there every once in a while and kind of like see what the retail investors are talking about and which companies are they interested in and so on and so on. So that's what do you think? How do you feel?
Yeah, so what we can start with just giving a brief description of what the OTC markets are. So let's go way back, right? So if we go way back, stock trading was not what it is today, of course. Before, stock trading was usually done in a place. I'm not sure where it started in the US, but I know for a fact that in Mexico, the stock trading started in the back patio of a coffee shop in downtown Mexico.
No way.
Yeah, like there were big offices in downtown Mexico City, and so a lot of directors went to a certain coffee shop to have coffee. And so they started to negotiate to have people buy stock. And so the coffee shop owner, which funny enough was a woman, which if you know the story of finance, women were not really involved in finance for a very long stretch of time. So that coffee shop owner kind of put in like a chalkboard, some seats in the back of the coffee shop so that directors could go in and sell their stock to each other. So that's kind of how it started. It wasn't always an exchange. It wasn't always as big. It was, a place where you and I could go. If I had a company and you had money, I could go in and sell you my stock and you could buy it and you could maybe sell the shares to somebody else at a different point in time. So with that,
talking early 1900s or late 1800s?
Early 1900s.
Okay.
But very early 1900s. Like you're talking about a long time ago.
Love it.
And so with that background, now you see the stock and investing, and you see the Nasdaq, the New York Stock Exchange, you see the London Exchange, and you see the big exchanges. And those exchanges are usually reserved for big companies. You're talking about the Apples, the Microsofts, the Teslas, very big companies. And so small companies started to be neglected. And for a long period of time, small companies, and even going back as 2000, small companies were still traded, like I just told you, in one-to-one exchanges in a dark room in the back of a coffee shop. That's how people traded stocks. And I'm sure that you and everybody else watching this podcast has seen The Wolf of Wall Street at least once. And that's how OTC stocks were traded. It's one-to-one. You go, you dial, and you sell, and that's how it's done. So now, of course, small companies are a very big part of the economy. Amazon wasn't the Amazon that we know right now since inception. I mean, at the time, it was a very small company. Apple was the same. We all know the story of the garage. So small companies need a place to start to grow, to list, to look for capital. And that's where the OTC markets came from. So they start there, and when they get bigger, they graduate to the NASDAQ, to the New York Stock Exchanges, to whatever. But further, you're talking about 2000, 2007, the OTC traded stocks was like the wild, wild west. Like you didn't know what you were getting into. You didn't know what you were buying. You didn't know who was selling. There was no place where you could find the information. And so the OTC markets started to become a more bigger, more fleshed out place where people could buy and sell stock, and where companies would list the stock, but would also publish information about the company. Not too much. Some companies do, some companies don't. Back then,
So maybe speak on the different tiers, because obviously there's 3 different tiers on the OTC market, on the over-the-counter market. So what are the 3 tiers? What is the requirements, more or less? You don't have to go into specific details, but just kind of like the big pictures, the big overview. What are the 3 tiers? What are the differences between the 3 tiers?
yeah, definitely. So now that the OTC markets are a bigger marketplace, of course, it has become more easy for investors to get information, right? That's kind of that's why the SEC is what it is. It's just so that investors, either retail or institutional, can get access to information. And so the OTC markets started to become a place where companies would publish their information. And now in the process of evolving, the OTC markets kind of developed 3 tiers for their companies. The first one is OTC ID. Now it was used to be called OTC Pink. I think in a month or two, it's going to switch to OTC ID. Now it's OTC Pink. Then you have OTC QB. And then the highest tier, it's OTC QX. So they go in quality. QX is the best. Pink, or what's going to be OTC ID, is the worst quality. And not quality in terms of the company. It's quality in terms of disclosure. The more the company discloses information, the higher the tier is. So let me walk you through it. So OTC ID or OTC Pink companies are companies that just comply with the bare minimum. And the bare minimum is you have to publish what's your outstanding shares and what's your authorized shares. You have to publish who are your directors. You have to publish issuances of shares. So if the company gave shares to somebody, you have to disclose it. You have to publish who's the owner of the shares, more specifically the directors and the voting block of shares. So who runs the company. And that's pretty much it. You don't need to publish anything else to be listed on the OTC. So those companies that don't disclose that much, they're reserved for the OTC Pinks. Of course, the company can do more if they want to, but they're not required to. That's the thing. They can, but they're not required.
Also important to mention that with different tier, there is different costs. So some companies prefer to stay ID just because it's more cost effective for them. They're not making huge revenues, so they cannot justify a higher fees in order to kind of qualify with the QB and the QX.
That's a good thing. That's a good thing you mentioned, because yes, of course, small companies don't have a lot of money, and being public takes a lot of money. Like if you list on a NASDAQ, you have to pay a lot in fees. But the thing that OTC Pink companies have that's good for them, at least for a certain period of time, is that they don't require audited financials. And auditors are very expensive. Like even the cheaper ones for small companies are expensive for the type of company. You're talking about companies that don't have a lot of money. So even $1,500 is too much for them. So that's another thing. Of course, it opens the door to some funny accounting situations, let's call it. But it works for companies that not have to pay the auditors. And of course, the fees for them to be listed on the OTC ID or OTC Pink are cheaper. So that's good for companies, and that's usually where they start. But of course, OTC Pink doesn't get as much attention as the other tiers. So eventually, companies like to graduate to the OTCQB, which is the next tier. Now, for companies to be listed on the OTCQB, one of the requirements is for the price, the stock price, to be at least a penny. That's kind of one of the requirements. Of course, the price of the stock does not fully reflect the quality of the company, but it is an indication. So the OTC markets require that it is. For OTCQB, companies have more requirements. So they have to be SEC reporting. That's one. Or they have to provide alternative reporting, which is the OTC markets reporting, but they have to be audited. So now you're talking about companies that have, at least on the disclosure side, higher quality reports. And so it allows investors to have a more complete picture of what's going on. Of course, as a company is fully SEC reporting, you're talking about quote unquote the highest standards of reporting. But even if they're alternative reporting, they still have to comply with that standard. And now I think we haven't talked about what alternative reporting actually is. So alternative reporting, it's kind of a template that the OTC markets created so that companies could disclose. So you can think of what the 10Q or the 10K is. They have a template. They all look the same. They have different information, but they all look the same. And they're all required to disclose at least the same information. So the OTC markets came up with their own version of the 10Q or the 10K, which is what we call the alternative reporting. But companies have to comply. If you look at it, it's a quarterly and an annual report, pretty much as a 10Q or a 10K would be, just not as stringent, not as tight as a 10K or a 10Q is. So that's for QB. But then you can go to even a higher tier, which is the highest of all, which is OTCQX. Now, OTCQX is, of course, harder to get to. It takes companies, they have to have at least some level of revenue, some level of net income, some stock price. You're not going to see an OTCQX company with a penny stock price. That's not going to happen for OTCQX. And just so you know what kind of companies list on the QX, there are a lot of international companies that instead of going public in the NASDAQ, they go public in the QX. You may see as the last stepping stone for companies to go to the NASDAQ is the QX. And most companies...
Why a company would go QX instead of NASDAQ?
Good question. So the main reason is the money. Even QX is a higher tier, but it's cheaper than NASDAQ. So a lot of companies, instead of going public in the NASDAQ, for example, for international companies to list in the NASDAQ, either they have to do a direct listing, which is expensive, or they have to go through what's called an American Depository Receipt, which is like a proxy of a share. It's not a share, it's like a title of a share. It's kind of hard to explain what ADRs are, but a lot of companies are listed on the NASDAQ to ADRs, but an ADR is not as attractive as just the outright stock. But listing the stock in the NASDAQ is more expensive than listing in the QX. So that's why a company would rather go to the QX than go to the NASDAQ. If you go and look at the list of QX companies listed right now, you're going to see that the companies are really good. They're really good. They're NASDAQ level companies, but for some reason, maybe management decides that QX is cheaper, but still provides the same access to capital than NASDAQ does. So they rather go to the QX than go to the NASDAQ. And so for that reason, the OTC markets have been very attractive to small investors because you're talking about companies that are on the way up, presumably, quote unquote. Not everybody makes it, but the ones that do start there. Like I said, Amazon wasn't always $1 trillion company. At some point, it was a microcap company. And so it's very attractive for retail investors to go in. You can buy a considerable position of a company with just a couple $1,000. I mean, how many shares of a company, like let's say that you wanted to buy, and maybe I'm going too far, but what if you wanted to buy some shares of Berkshire Hathaway when the stock, one share costs $250,000? Like you need to have some serious money to get invested there. Even Amazon or Tesla, you know, how many shares can you buy with only $5,000? Not that much. But if you go to a smaller company, you can get a sizable position with not as expensive. And if the company succeeds, then you're in to make a lot of money. So it's very attractive for retail investors, the OTC markets. Of course, it has its flaws, like any other marketplace, and companies, because they're not required to disclose that much information, some funny business may happen behind the scenes that investors don't really see and that the exchange doesn't require the company to disclose. Of course, it isn't without its faults, but nothing is. It's just a matter of being careful.
I think
And
that's why David Sling comes in and kind of like, again, this is a higher risk, high reward type of game, right? Like if you bet on the right horse here, you can do very, very nice multiples, but at the same time, a lot of those horses will not make it to the finish line. So that's where you need to kind of like watch out, or they will, it will take them a very, very long time to make it to the finish line. So I think with, especially with the OTC ID and with the OTC QB, I think you need the extra alerts since those financials are not audited, and since they're not those companies are not required to give all this information. It's important to have extra indicators that will kind of like show you the financial health of the company, the financial health of the stock, the liquidity of the stock, how much is this stock being traded, and so on and so on. And this is where David Sting is coming to the picture.
yeah, with every company, you need to stay informed. But I think with OTC companies, it's more important because one small thing that they do can create massive returns in the future, or on the other side, can be the end of the company. So you need to be aware of that. And the thing that OTC Markets has, it's a very good platform. Like you can find information, but it's not mainstream. It's not in the mainstream media. Just a couple of days ago, I think on Monday, I was talking to some service providers, some information providers about, different access to different types of information. And I was mentioning OTC companies. They're the professionals. They didn't even know where to find it. I had to tell them you need to go to otcmarkets.com, and that's where you get the filings. So you can see that it's not available. It's not, you cannot go into Yahoo Finance and find the latest 10Q of the company. It's not easy. It's not easy. And that's why we developed David Sling, because it allows us to get access to that information that no other service provider has.
Love it.
And we can go into some details. I can show you some, like what it looks like on the platform
I think
when.
I think it's a good idea. I think maybe we can share a screen and kind of like go through, some alerts from the previous weeks. What did we see? We've been following a few companies. Some of them companies we've been involved with, and some of them are from Investor Hub. So it would be nice to kind of like walk the, walk
Yeah.
the people who's watching. What are we looking at?
Yeah. uh I think you should be seeing my screen now.
Correct.
So
Yes.
I'm gonna show you what it looks like. So last week I went into Investors Hub, which, if you don't know, it's a really good place where retail investors go and discuss. It has like discussion boards, so people talk about it. It's a great tool. So I went in there and grabbed, kind of the hot stocks that they were talking about, and I added them to the platform so we can track.
Maybe open Investor Hub to show us like what exactly you look at, and where did you find those companies?
Yeah, so here, I mean, this is the talk of town, Investors Hub. Like, if you really want to see what's going on, what people are saying about a certain stock, you can just go over here to the boards, and you can see, how many posts people are doing about a certain stock. So let's say we go over here. Um, if we go over here, you're going to see people discussing stocks, and you're going to find a lot of stuff here. Like I wouldn't trust this as a 100% true source of information, but at least you can see what people think about a certain stock. So
100%. By the way, everything we're saying here, it's not a financial advice, and we're just showing, we're just showing what we kind of like going through in our due diligence process. But nothing is a financial advice, and nothing here is a recommendation.
yeah, every stock that we mention, it's not a recommendation. It's just we're just talking about it. So do your own research before investing, and realize that you may lose all your investment, especially when you invest in OTC stocks. So as you can see, there are a lot of tickers that come up when you're seeing here in Investors Club. So we just grabbed a couple of them that seemed interesting to us and added them over to our software so we could track what's going on with them, if they file, what filings they do, if they issue shares, if they dilute the shareholders, how much, and then we can look into why, what happened. So we grabbed a couple of them. OTC alternative reporting companies and some NASDAQ companies, or at least SEC reporting companies as well. So during the last couple of days, for example, one of the companies that we grabbed, it's UAV Corp. If I remember correctly, they do some sort of drone situation. But what we got, since it's the period for companies to report, they filed their quarterly report. So here we got an alert on it. It was filed 1 day ago. It's an OTC file. So here we can see that it's not an SEC filing like a 10Q or a 10K. It's an OTC file. In this case, it's a quarterly report, an alternative quarterly report. And we can see, we got the alert. I got the alert on the app. I got the alert on my email as well. And then I can click it and I can see what's going on with the companies. So, here I told you they have to disclose the outstanding shares. They have to disclose the history of the public entity, like if they have merged, if they have changed names, if they have changed tickers, the state of incorporation, a little bit more detail on the shares, if they have.
So you is the OTC ID, QB, or QX? It's definitely not a QX, but this is not This is not audited, I believe.
Yeah, here it's pink. It's pink.
It's pink.
So we can go. Let's look for the stock. Let's look for UMAV. And as you can see, it's a pink company. It's a pink company right now, which in a couple of months is going to be OTC ID, but they're the same. OTC ID and pink are the same, but it's a pink company. So we know it's not going to be audited. The information disclosed may not be as complete as you would find in an fully SEC reporting company. So here you can see over this, if they have preferred shares, they need to disclose what they are. If they pay dividends, if they don't, if they're convertible.
This is basically information that the company just publishing. Nobody is actually checking if this information is correct or not correct.
Exactly. I mean, it is and it isn't. Like, one of the requirements of the OTC, at least alternative disclosure, is that annual reports need to be reviewed by legal counsel, by a securities counsel, but they're not auditors. They don't know. They just take a look and say, hey, this looks kind of right, so I'm going to approve it. But they're not auditors. They're not going to know if there's an accountant misstatement in the financials. So nobody reviews this, and that's kind of where the risk is, at least with pink alternative reporting companies, is that nobody's reviewing that this is correct and this is in fact happened.
So companies can say, pretty much whatever they want. Obviously, they're not gonna. Again, I don't believe there is gonna be a complete fraud, but they can, they can present the numbers and the information in the way that they want to present the numbers and the information. Their legal counsel is going to give them the thumbs up, and the information is going to be out there.
Yeah, for example, over here there's a table that they need to disclose the issuances of shares, which is fine. It works. Like we can see over here that
Maybe make it a bit bigger. Yes.
on February 15, 2023, the company issued 5 million shares to Coates Brother Enterprise, whoever that is, for shares pursuant to a Regulation A offering. If we go further down the line, we can see, hey, they on May 13, 2025, they issued, which is a week ago, by the way. It's not that far away. They issued 24 million shares to Trillium Partners as a conversion of debt. So this way, the investors can know what's happening to the stock price, if they're diluting or not. Just over here on the filings, by the way. Of course, the filing, it has to be until the date of the filing. So we are going to see what happened on May 20th. But going forward, the next time we're going to know, at least on the filings, it's on the next reporting quarter, which is going to be on April or whenever the company reports, by that matter. And so, for example, here's another part. So there's a table, and all of this appendices is what the OTC markets require from companies. Everything that you see, and we're going to get there, is not required. But here, for example, they're required to disclose how much convertible debt they have outstanding, if any. Now, to your point, Ari, some companies don't fill this table out, even though they have convertible debt. But it doesn't, nothing happens if they don't. So, you kind of have to rely on that the company is going to disclose the information that it's needed.
So another indicator that can shows a health of a company is if they do or do not disclose what they need to disclose, because most of those companies will have debt, and if they don't disclose the same way that UMA, for example, do, it's not a good sign. It seems like they're hiding something. It seems like in this case, where what we're looking right now of UMAV, it means that they're like, they're showing what they need to show. So they're not hiding anything.
Yeah, absolutely. If they
This
don't
is how it
disclose
feels
it,
to me. I might be wrong, but at least this is how it feels to me.
yeah, no, definitely. If they don't disclose, it's a red flag. Like when you're dealing with public entities, either Nasdaq trading, it doesn't have to be OTC markets. When Nasdaq companies, when every public entity doesn't disclose information, it's a red flag automatically. So some companies don't fill this out. They may disclose it further down the filing, but they don't do it over here. And so, they have to disclose what type of business they're in, if they have any subsidiaries, this is just, the requirement from OTC companies and what the OTC markets requires them. So, they can, from what I can see over here, UMAV is very, very complete. For some companies, it's only one paragraph and that's it. Like that's all you get about the company. That's all you get about what they do, which of course, I wouldn't say that it's bad, but it's not optimal for small investors, right? So here it seems to be very complete. So here they have to disclose the ownership, who owns the company, who controls the company, how many shares they have, what percentage of the outstanding they have. So, for example, here we can see that, for example, Michael Lawson owns 10 million shares of preferred Series B. So he owns 50% of all the Series B preferred. And if we go to the top, there's a paragraph where they say what the Series B preferred has, what rights they have. So if you wanted to see which entity or which individual controls the company, you can see it that way. Some companies have different classes of shares, and a certain individual can own, let's say, 100% of that class share and still have no voting control over the company. So here you can see, hey, we can see that Michael Lawson has 50% of the Series B preferred. Now we can go back up there again and see what that really is. So look, each share of Series B preferred shall be entitled to a number of votes equal to 95% of the voting power attributable to all shares. So that guy, Michael Lawson, has control of the company just because of the amount of shares that he has and the rights that the shares give him.
I
So,
think,
that's
but I think if I do the math correctly, the Series B entitled for 95% of the voting, and he owns 50% of the preferred B, which means he only owns 47.5% of the voting. Am I correct?
no, because it's all shares that are entitled to vote. So it includes the common shares as well.
Okay.
So so he owns 95% of all voting classes. So it's Series B, Series C, whichever, and common stock. So since he has 10 million shares, 50% at any given time, he owns the majority of the votes, if that makes sense.
Okay. The math doesn't add up because he owns only 50% of the 95%.
Yes, but the other individuals only hold 20% or 3% for the other individual. So still, even though he only owns half of the Series B, the other shareholders don't have enough to have control over him.
I see what you mean. Okay, makes sense. Yes, because they only have 29% total. So then he has, yeah,
Yeah.
I got it.
And so you go here, the company has to disclose if they have been subject to any lawsuit or whatever, which, most of them don't. So you're not going to find that here. You're going to see who their securities counsel is, which right now for UMAV is Jeff Turner, a very big attorney in the OTC space, and who their auditor is, if they have, or any consultant. And that's it. Who the CEO is, which is Michael Lawson. So he's owner slash CEO of the company. And as it relates to basic disclosure for OTC, this is where it stops. Like up until here is what OTC requires you to disclose for the stock to be listed in the OTC Pink. Any more information than this, it's up to the company. They may or may not file it. And so here we can see that UMAF does. They disclose the financial statements, so which is good. It's gonna be very strange to hear it, but a lot of companies don't disclose any financial statements. They cut it up to here and that's it. That's all the OTC markets require, and they leave it there. So here for UMAP, they do. They disclose it. I mean, we're not going to go into a thorough examination of what UMAP is and if it's a good investment or what type of company it is. But at least you can see that, they have a balance sheet. Very good. Looks to me very similar to what fully SEC reporting companies do. You have some sort of P&L for the period. You have a statement of shareholders' equity over here. You have as well the cash flows, and then some notes to the financial statements, which you can read through, you can find, you can whatever. Most of the companies don't do it, at least pink companies. QB companies, it's different, but pink companies, not everyone does. If you find a company that does it, read it through. You're gonna find a lot of information on them. But as you can see, this is kind of like the 10Q for an OTC company, alternative reporting company. A lot of information over here, which is what they chose to disclose because this is not required. Okay. And let's just real quick, if you go to the OTC markets and you look for the company, you go over here to disclosure and you're going to see that OTC disclosure, which is every alternative reporting company disclosure, you're going to see it over here. So you have the quarterly, which is the one that we just saw. You have the annual report that was filed a month ago. And so, you can go further back to whatever filing you want to find. The thing about this is that there's no service provider right now that gives you an alert when this gets filed. Like, let's say that you were an investor in UMAB and you wanted to know when the latest quarterly report is presented so you can review it. You're going to have to be, let's say, the reporting period starts in May. Companies start to file their quarterlies in May. So every day you're gonna have to go here, you're gonna have to look UMAV, and you're gonna have to look over here to disclosure and see if they filed, which takes a lot of time. It's not very efficient. So that's why we decided to build a tool. We get an alert every time they file these quarterly reports. So I don't have to be looking at UMAV every day to see when they decide to finally file. And I can just get an alert real quick for when they do. And as you can see, there are very different type of reports. They have supplemental information, which is similar to what an 8K would be for an SEC reporting companies. You have notifications of late filings, the management certification letter. Every type of OTC disclosure, you're gonna get an alert over here, which I think that's, at least for us, has been a very useful tool so we can monitor what OTC companies are doing. We know that there are some retail investors that only invest in pink companies, which is fine. They do offer the greatest potential for return. That's why they're attractive. For this to go from 007 to, let's say, a penny, it's a big return, which you're not going to have maybe in a blue chip stock, but you need to be aware of this. Like, this is crucial. This is very important. Reading filings, it's the best thing that you can do when you're invested. And even if you're not invested in a company, just to see what other companies are doing, what other things are going on. So it's very important to keep track of this. So
Now, Paulo, I seen on the alerts that you also had the UMAV alerts for increased shares. So let's go back to David's thing, and I saw that UMAV, you got 2 days ago a notification that they increased their outstanding.
yeah, so let's go ahead and look. So UMAV. So we can see over here that UMAV, on the last couple of days, they've increased their outstanding shares. So I think this was the date when I added the company for it to be tracked, which is April 23. Now then, on May 13, which is a week ago, they issued 65.3 million shares. Now, if we were to go to the filing over here, we could probably find the issuance of shares. We could probably find it.
Yeah.
So here it's probably how much is it? 65. Sometimes the companies, they may bunch it together when they update, which is another thing. So when companies issue any shares, they have to report it to the OTC markets over here, where security details, you can see the outstanding shares over here. They may not do it one by one. If they issue shares, let's say they issue shares Monday through Friday, then on Friday they report the sum of the change. But over here, we can see that UMAV issued 65 million shares, which let's see, the stock price is 007. So let's say 65 million shares at 007. Am I doing this correctly? It's almost $500,000 worth of shares. I don't know if I'm tripping. Yeah, 007.
65 times. Yeah.
Yeah, it's $457,000 worth of shares. So something's going on there. And this is another thing that investors need to be
They're either
aware of.
raising money, or they're either somebody's converting.
Look, if we go to the latest issuances of shares, we can see that it's mostly debt conversion.
Right.
So let's add up the points together. So they issued 65 million shares in debt conversion, and probably these debt holders are gonna want to get their money back. So they're gonna go ahead and sell in the open market. So if you're an investor, you know that the dilution is gonna cause the stock price to go down. So let's say that on a given day, you get the alert that they issued 65 million shares, and you know that it's $500,000 worth of shares. You may want to exit your position if that's your strategy, but at least that's what happened. it's a 21% increase in the outstanding. It's quite big. It's a lot. It's a lot. And then you can see that again on the 19th, on Monday, they issued another 33 million shares, which, it's another $200,000 worth of shares. So, and
On
if you
one hand,
follow,
yes. On the other hand, they are cleaning their balance sheet, So it's also, they're cleaning their balance sheet. So sometimes those conversions are good to make sure that the debt is no longer there.
let's look at the latest month of trading. So, that month ago, the stock was worth 3 cents. It is a month. Yeah, it is a month ago. A month ago, the stock was worth, let's say on the high, 3 cents, and now it's worth 0.007. So probably the people that converted this 65 million shares. So if we go back, let's do 5 days, which 5 days kind of adds up. Well, it does. It's not as clear here as it was in the last graph, but over here it was trading at 0.086, and now it's at 0.007. So there's two sides of a coin. So, and one side, yes, you're right, the company's cleaning up their balance sheet. So that's good for them. But on the other hand, was there an issuance of shares? If they're converting debt and they're cleaning their balance sheet, the debt holders are probably going to want to sell and get their money back. And so let's say that you're a long-term investor, that you really believe in UMAV and you think that they're going somewhere in the future. You might see that as a good signal. They're cleaning up their balance sheet. They're going to pay less in interest. At the end, it's going to be a net positive for the company. But let's say that you're a swing trader, a day trader, and you see this, you're going to know that in the next day or two, the stock is going to tank. So if you're a day trader, that the time horizon, it's a couple of days, a couple of hours, even
Even a
this is
couple
not good
of
for you.
months, even a couple of months. I agree with you. It's you have here, this is a big indicator that there is a big seller out there, and I would watch out.
Yeah, and like this adapts to different strategies. Like if you're a swing trader, you might think that it's an opportunity to sell, to get out before the other sellers come in. But let's say that you're a long-term investor in the company and you see, hey, I'm gonna monitor this and look for when the debt conversion is done and when the sellers are done. And when they're done and the company stops diluting, I'm gonna go back in and buy some shares. So the same tool can have different uses, and it really depends on your thesis, on what you want to do, on your time horizon, and whatever you think of the company. But however you want to use it, I think it's very useful to have this information over here to at least understand what's going on with your company. And here, it's a good thing that we did this today, because we could show off a lot of things. So we can show the filings, and we can show as well that UMAV diluted. Like, we're not just coming up with stuff in our head. This is things that actually happen and things that company actually do. So, I think it's a very productive recording right now to be able to show this. Um, and I think retail investors, especially since they're involved with a lot of OTC companies. Like if we go over here to the breakout boards, like most of these companies are OTC companies, and you see that they're the most popular. They're the most popular companies that people are tracking. So giving us and everybody else a tool that helps you track, a lot of companies, but OTC companies included, we think there's a lot of value in that.
That's amazing. I think this was very good, very helpful. I think we learned a lot today about the OTC stuff, about the OTC market, about the different tiers, about the different levels of requirement and auditing and disclosing information. I think this was very good, Paulo. Thank you for that.
No, of course, and that's my pleasure. I think, there's a lot of tools out there that you can use. There's no one tool, but the more tools that you have, the better investor you are. And I think that's especially relevant for OTC companies. There's a lot of stuff going out there. You know,
And you want to get the information that they don't disclose, because that's actually the secret sauce to understand the health of the company. So
yeah.
This is
Exactly.
how we learn. So great stuff, Paulo. Always fun chatting. I'm looking forward to next week to see what other notifications and things we're gonna get. So that was fun.
Sure. I mean, it's gonna be interesting. I'm looking forward to it as well.
You too. Cheers, Paulo.
See ya. The information in this podcast is for entertainment and educational purposes only. Nothing shared here should be considered investing, legal, or financial advice. Please do your own research or consult with a professional before making any financial decisions.